Welcome to the UK, Mr. Carrotman. How are you?
Thank you. Yeah, it's a pleasure to be here in Bedford.
It's a pleasure to have you here in Bedford. And we got a lot to talk about.
I think so.
So, can you predict the market?
No.
Listen, lots of stuff's been happening. Lots of charts, lots of models over the last few years. I follow some on-chain people, and it's got to the point where I'm like, you know what? I'm just going to ignore this shit. I'm just going to buy Bitcoin, forget about it, because I don't. It doesn't seem like anyone knows what they're doing, or sometimes they get a bit lucky. But then along comes Root, and the first thing I saw of yours that really stood out to me was that circular chart. You know the one I'm on about?
The spiral chart.
The spiral chart. I was like, okay, this actually makes sense.
Yeah. I think I like those charts the best because it's kind of cool to try to visualize Bitcoin's data in a way that you don't really need a model to see where it's going. And I think the spiral chart is one of those charts that really shows this,
That's in your selection that you're going to take us through.
Yeah, we can look at some slides to guide the conversation, I guess. I put that chart in there. Yeah, it's the first chart. So
we used to do this monthly show with Willy Woo, which was really super popular for obvious reasons. It was like our biggest show ever. I think something like 3 or 4 of our top 10 shows ever were Willy Woo shows.
And they were really good.
They were great. And we are a numbers-based business. This is a business. It's a podcast, but it's a business. Mm-hmm. So it's a numbers-based business. Sponsorship is based on downloads, and we have to take all this equipment, these people around the world to make this show. So it's to walk away from a successful show like that's quite difficult. But at the end, you've got to focus on your product as well. And we couldn't do it in person because Willy's not based in the UK, or he doesn't travel much. And also, in some ways, it kind of like, are we just doing this for the numbers? And how you source the information. Like Willy was always really honest, like, these are just models, yada yada. But we decided to get away from doing that. But like I say, Mr. Root, I do like your charts and I do like your work, and it's great to connect with you. Before we get into some of this, because I've got loads of questions I know Danny has, how much of your background, or how much can you tell us about you without telling us who you are and giving away? Because everyone watching right now is, I don't know what we're going to do this. Maybe we have a big carrot over your face, but how can we do that without doxing you?
Well, I can tell a little bit about myself, I suppose. I have a scientific background, always been an entrepreneur in life. I did a lot of data analysis before, so I kind of rolled into the field naturally. I started my Bitcoin journey in 2016. I actually got some computer science skills as well, so like programming, and I know quite a bit about distributed systems. So I got into Bitcoin actually because of hearing about the Byzantine general problem, which was solved, and then that caught my attention. And I already luckily had the flexibility to kind of work on the things I liked. And so basically from day one that I found out about Bitcoin, I kind of started working on that full time. And I started building some tools to analyze Bitcoin's blockchain data. And, I started out with my own node, of course, and looking at the raw data itself at first, building some indicators. And, I was building out a bit of a platform for strategies, and that allowed me to create like these kind of cool charts. And I started sharing some of those on Twitter, and that got
very popular,
well received by the Bitcoin community, which is it's nice.
So I'm going to talk about one particular model, not yours, but it was from one of your compatriots, should we say? The stock to flow was a very popular model.
Yeah,
I thought it was cool, believed it because lots of people I trusted believed it. It kind of made sense. Like it mapped logically to the Bitcoin cycles. I think Corey was one of the first people to come out and say, not sure about this. Where were you with stock to flow? Did you originally think this is a useful chart? Is a useful model? Or?
Yeah, I mean, I like creative things as well. So from a creative perspective, I thought it was a really cool idea to look at the data in that way. And, some of the critique on the stock to flow is definitely valid. And you had to be cautious with it. I had some people in my circles that were early on kind of skeptical about it. But I do like to model from this creative, perspective. And it's, obviously it's quite a bit below the model value, and so people stop believing, obviously. And it's it's a pity in a way, like that it got so popular, because it's just a model, right? Like a model is just a way to kind of to try to predict something, but this got so popular that people just started believing in it completely, and stopped being rational about it, right? And you always have to be a bit skeptical about models that predict the future. They can't be wrong. So
is there any possibility that because the model became so popular, everyone was following it? Well, not everyone, but a lot of people following it. A lot of people perhaps taking positions, thinking, well, this means Bitcoin's going to go over somewhere between 100 and 200K because the model said so. The model's worked before. And then whales watched this and observed this and said, I'm just going to counter trade this.
Well, I don't believe so, that intentionally they are counter trading that. Like, there might be certainly some out there that it happens, but in general, I think I actually will go into with some of my charts, because I made a model myself as well. It's called the Hodl Model. We'll go into some of this of these things, these concepts. It's also a bit about Bitcoin's scarcity, and it also shows perhaps like where the stock to flow model went kind of wrong in a way. So I think it's an interesting perspective, but maybe it's easier to explain, with some of the charts if we put them up.
All right, we'll go through the charts, but just one question before we do go into that. I do want to know, what's your personal Bitcoin thesis? Like, what's your conviction behind it? Is it purely as a tool to trade? Do you see it as a human rights tool? What's your personal kind of?
I believe that the financial system, the current financial system, is
fucked.
Yeah, pretty much. And so we're going to transition into Bitcoin, and it's either this dystopian future where we have like a WeChat, but then a Western version, which we're going to use here, or it's going to be like freedom money, which is Bitcoin. So I do believe in Bitcoin, in hyper Bitcoinization, and it's hard to say, to look at the time frame on what this is going to play out. I mean, maybe it's 5 to 10 years. It could also still be 20 years. We'll have to see. Depends on how far we get in each cycle.
Awesome. All right, Danny.
Should we pull the slides?
Let's pull the slides up. Cycle. Okay, so listen. If you're listening to this on the audio, we're obviously going to recommend you go and check the video out, the YouTube, because we're going to be using a lot of charts here. At the same time, I will do my best to try and explain what's going on. But we're going to start, with the Bitcoin spiral based on halving. By the way, this is a chart you should definitely go and check out. I think this is the one that really stood out to me, Ruth. I was like, okay, this guy's cool. We've got to talk to him. Do you want to explain what this chart does?
Yeah, so this one is, actually, maybe I can say a bit about the history of this chart first. I was not the inventor of this chart, by the way. So it actually started out with like a pendulum chart, like a pendulum was swinging and it was kind of drawing Bitcoin's price. And then some other account, also on Twitter, I think at Clockwork Parts, they created some of the first polar charts, similar to this one. And I really loved that concept to explore Bitcoin cycles, because I think cycle theory is very interesting. And I try to, make them cooler and, more attractive, and added some stuff to it. And so in this particular chart, we're looking at the spiral chart based on the halving. So the halving is initially the catalyst for each cycle. And so this one, it basically each round in a circle, each rotation in a circle represents one halving. And then the blue dots that you can see, those represent the days that we kind of made all-time highs, or the blocks in this case that we made all-time highs. So one rotation is one halving, which is 210K blocks, and which is about 4 years, a little less than 4 years in general.
Okay. And what is this chart? How is it useful for you? What does it tell you?
Yeah, I mean, the fact here that you can just see that it's spiraling out, right? So it shows that with each halving, like Bitcoin's price in this chart is like it's expanding, and so without any model, we can kind of see, that the price has never crossed itself, so we can kind of see like, oh, what is a bottom in a way, like through this chart.
But how does that work? Because the prices have gone up to all-time highs and come back down.
Yeah.
So what do you? Is it because it hasn't hit itself because it's based on time?
Yeah, it's in this chart is based on block time. But if we switch to the next chart, it's
hold on a second. So what we're basically saying here is like Bitcoin is volatile, but on an annualized basis, on a cycle basis, it's never. It has the price has gone lower than previous all-time highs, but on a cycle basis, it's never dipped below itself.
Yeah.
So basically every 4 years, you're pretty safe.
And that's because there's like seasonality involved in Bitcoin. And that's why if we go to the next chart, which is also the spiral chart, we continue with this. But I changed it now. So this one is based on time. And so instead of looking at the halvings, here we look at time. And the reason why that's useful is because, as humans, we think in human time, we don't think in block time, right? So, so for market analysis, in general, human time is better, in my opinion. And the thing that stands out here is that, in this chart, so if we take the 4-year chart, so every rotation in the circle now represents 4 years, starting in 2009. And we see now that all the blue dots, all the all-time highs fall in the first quarter circle, in the first quadrant.
Apart from the first couple of years.
Yeah, apart from really when Bitcoin, in the early days in 2009, indeed. But the last 3 cycles, all of those all-time highs fall in that first quadrant. And why is that? Well, that is because of the cycle pattern that we have, which is kind of initialized by the halving, but seasonality tends to play a role as well. So you see that mainly around Christmas time is when every 4 years at least around Christmas there has been this blow off top and then a fierce correction.
Right. Okay. And the interesting thing about this is that you can tell with the cycles, it is the gaps between them are starting to constrict. So it's taking a bit more effort for the price to rise. Is there a logarithmic version of this?
This is on the logarithmic scale.
Oh, this is on the logarithmic,
right? Like, so you can see.
I can see. Yeah. Okay. Yeah. So it is starting to get
each
tighter.
ring in this cycle is times 10.
We don't want to make this too popular, because if we make this too popular.
Yeah, who knows? Like eventually the price might fall and cross below. I think that will happen at some point in the future because, with an increase in market cap, it becomes more difficult for the price to rise. And so there is a likelihood that at some point in the future, perhaps, it will cross the previous cycle. And also because cycles are shifting, right? Like, so, at least it's likely that they will shift in the future in some shape or form. So then it's more likely that the price might cross a previous cycle at some point.
So we got about 2.5 years of bullshit to go then. Yeah. 2025 is going to start getting interesting again.
Yeah. Well,
I hate this chart now.
Yeah. So in this one we can look at the halving. So actually the green dots in the fourth quadrant. You see like some dark green bigger dots. Those are the halvings. So you can see that each rotation they move a bit back, right? So that's because the halving is usually a little less than 4 years. And if we go to the next slide, also the bottoms are so the bear market bottoms are marked, and you can see that they are usually in the south of the chart. So they also happen around the same period. And
sell. So you're saying you're telling me are you selling?
No.
Yeah. Okay. This is really interesting.
Yeah. So, but this is the perspective of a 4-year cycle, and we'll get into some different perspective. You can look at cycles in different ways, but indeed here it shows that usually at the south, which we are kind of approaching, which would mean the end of the year, is where we would potentially make a low based on this chart. Obviously, there are some differences this cycle, and that is because the hype top was actually in April, so we kind of have been kind of correcting. We made some higher highs in November, and that again I kind of blame on this seasonality and this kind of I think people were expecting prices, everyone, me included, we were expecting prices above 100K at least, right? And so it was kind of like this self-fulfilling prophecy that around Christmas we were going to again see like new all-time highs, and it happened because of it. But it was actually not because there was any hype in the market. It was just because holders of Bitcoin, hodlers, they were just kind of believing that it would happen, and we managed to make a few all-time highs in November. Again, those last blue dots that you can see, and yeah, I think after we have been correcting, but one could argue that, and I think it's actually more reasonable to argue that we have been kind of correcting since April, since we had the China mining ban and all that stuff. And so now I added the lows, and here I colored the cycles. So each cycle just has its own color, so you can differentiate a little bit better between them.
First peak, first all-time high.
Yeah, so there's quite some interesting things. So if we compare in this chart, so the peak of the 2013 cycle, the first, like 2013 was a double top, right? So the first top of the 2013 cycle actually coincides exactly with the first peak of the April top that we had this cycle.
Oh, really?
Yeah, so that is kind of incredible,
Wow.
on this time scale. And the first all-time high we started making after this whole summer correction that we had, was also exactly at the same moment in time. So that shows how cycles are kind of
Self-fulfilling prophecies.
Yeah.
Do you think part of that might be the kind of, when you look at there's like that chart that shows the different kind of emotional states of markets. Do you think that's just that's what's playing out? Because it doesn't matter whether it's tulips. It doesn't matter whether it's Bitcoin or oil markets. So it feels like every market seems to have that same kind of structure in price.
Yeah, it's human psychology, right? And in a way, it's cool how Satoshi was able to kind of record this human psychology, on the blockchain. And, actually this collective unconsciousness is like, recorded on the blockchain. So that's interesting.
Yeah.
Yeah. So this one, so again, we are looking at the spiral chart, but here I'm actually using some on-chain data to show. So I use the short-term holder cost basis, which is the same as the short-term holder realized price. The realized price is the average purchase price of all Bitcoin, right? So the last price that has been paid for each transaction on the blockchain, and if you count those up, you get the realized price. And the short-term holder realized price, or short-term holder cost basis, we actually look at that price, but then only for the last 5 months, and so we get like a more recent view, and so we can use it to color the price. So we go from like dark red, which means like heavy bear market, to like dark green, which is then heavy bull market. And we can see that like the darkest greenest colors we obviously have again in that first quadrant, with some like sudden red corrections, in the middle. Those were like the summer dip that we had, and also in the 2013 cycle we had this mid-cycle dip. And but all the dark red is basically in the second quadrant, which we are in right now.
But the bear markets seem to start a little bit later each time, or sorry, a little bit earlier each time based on this chart.
Yeah,
and same with the bull markets. It's the start of the bull market. So
yeah, it's not always a perfect view, right? There's ways to look at the cycle. So you can look at them from the halving to halving, or you can look at them from previous all-time high to previous all-time high, or you can look at them from the bear market bottom, or in this case we're looking at the 4-year cycle starting at the start of each year, right? So there's different ways you can kind of align them, but in this alignment, and I think this is it's a very good alignment to look at it this way. But indeed, cycles are like slowly shifting, and that's because the halving always has been the catalyst, and the halving is based on block time, right? So and so it's a little less than 4 years, and that's why you kind of see this shift.
Yeah, but it implies therefore by the end of the year we could start getting back into bull territory.
Yeah, south is the end of the year, and I mean we could potentially make like a bear market low there. Although if we look at on-chain data, and I think on-chain strength, I mean on-chain is not ideal perhaps to predict what is coming, but it's very good at looking like what is the current state of the market. And we have seen like true capitulation on this red dot, which is marked now at the southeast.
Yeah.
We have seen real capitulation there. So it is likely that the bottom is in, but yeah, obviously nobody can predict the future. And I do expect some downside perhaps again later this year. And it might be again this kind of self-fulfilling prophecy, right? That usually a bottom happened in the south, and so perhaps it does again, or at least we'll make some low, maybe like price might go down a bit, but the next 2 years look pretty good.
Have some dry powder just in case.
Yeah.
Sorry, Danny, just go back a second. So there has been quite a bit of criticism pointed at on-chain data and on-chain analysis. What parts do you think are valid, and what are the most useful parts of on-chain data that you use?
Yeah, so as I said, on-chain is not ideal to predict where Bitcoin's price is going exactly, especially not on the short term. It's more like on the long term, it does a bit better, but it's very good at looking at what is currently happening, like where are we kind of at. And so in that sense, it's very useful.
All right, Danny.
Yeah, so this is the last spiral chart that I wanted to show. So instead of looking at Bitcoin's price, we can also plot Bitcoin's market cap. And why is that useful? Yeah, because we can then compare it to, for example, other assets. Like in this chart, we included silver, gold, and real estate. And so again, yeah, I love this chart because...
I love this chart.
Yeah, you can, without any model, right? It's just data that is shown. We can kind of see where Bitcoin is going. And so this cycle, the past cycle, we were kind of trying to surpass silver's market cap, but we kind of rejected off of it 2 times, or
Did we get above it at all?
Maybe slightly at some point, I think.
Oh yeah, because we got over 1 trillion, didn't we?
Yeah, we got over 1 trillion. Yeah, I think silver is 1.2 or 1.3 trillion. But I think we just we might have gotten over it for like a short time, but barely. We kind of rejected off of it. And
I like this because it could be a rallying call for Bitcoin. It's like, come on, let's fucking take down silver.
Exactly, and gold next, right?
And then Peter Schiff.
Yeah, and then Peter Schiff is coming. Yeah, I was actually thinking of making one of these chart with Peter Schiff's face inside it.
Well, we used to have him up there on the board. We fired him. He used to be our. We replaced him with Jerome Powell. He did a good year or 2 as our mascot.
Yeah, I always saw him up there. Yeah.
I think you should change the gold line to the Peter Schiff line.
Yeah.
I love you, Peter. Very cool. That's my favorite one.
Yeah.
Okay, so the Hodl model.
Yeah, that's. I think it's an interesting topic to get into.
Yeah.
We can also talk a bit more about the differences between stock to flow. To give kind of an introduction to what the Hodl model is about, we first look at a chart where I plotted the circulating supply. So we basically go from all the way back 2009 to today, which we have today 19 million coins in circulation, and so you can see just the supply issuance of Bitcoin, and in that you can see the illiquid supply. So that is colored in blue. We can actually see the amount of coins that are relatively illiquid. Now, maybe I should define what a liquid supply is. It's useful, and that's again the strength kind of on-chain, is that we can classify Bitcoin supply, we can put them in different buckets. So we can with supply, we can look at, for example, the age of coins. So we can say, oh, this is supply that belongs to short-term holders or to long-term holders. That's one useful way of looking at it. Another classification is to look at it in terms of spending behavior. And that's actually what illiquid supply does. So you can divide supply into highly liquid, and illiquid supply. And in this case, what does that mean? So if I stack Bitcoin, imagine I DCA into some hardware wallet, and if I spend less than 25% of that Bitcoin which I'm stacking, then I'm relatively illiquid entity. So that's what illiquid supply means. So you can still spend some of that, but it's just that the majority of you will hold. So you're a hodler. And if you spend more than 25%, you get into like the liquid or highly liquid bucket. And so why is this useful? Because it's kind of like a proxy for hodling behavior, right? There's different ways to look at hodling behavior. Also, long-term holder supply is another one, which we look more at the age of coins. But here we look at spending behavior. And so the interesting thing and the trend that you can see is that obviously Bitcoin has its own supply issuance schedule. And in like pre-halving one, so when the block reward was 50 Bitcoin per block, we had about 7,500 Bitcoin per day that were added, and illiquid supply grew with about, let's round these numbers, 6,000 Bitcoin per day, more or less. Now, after the halving, obviously, the block reward halved into 25 Bitcoin per block or per 10 minutes. And that resulted in more or less an average about 4,000 Bitcoin per day. Now, the illiquid supply grew then with 2,500 a day, more or less. So the supply issuance was actually always outpacing, the illiquid supply growth. And that's because obviously, like most of the supply of Bitcoin has been, added in the last, 13 years. And so we're actually now already at 90% or so of all supply. 19 million of the 21 have been issued. So, the next 2 million will be issued over the next 100 years, so in the second halving, then so the supply issuance was still outpacing, illiquid supply growth. And so we then had 2,000 Bitcoin a day on average in new supply entering Bitcoin, but we only had about 1,000 Bitcoin per day, with illiquid supply growing. And the special thing about this halving is that we've started to
flipped
outpace. Yeah. So
this is the real flippening.
This is the real flipping. Yeah. This is a trend reversal. And so we now have been adding, 900 Bitcoin a day, more or less, but the illiquid supply has been growing by double that, right? So that's a very interesting trend reversal. And, I think it's kind of an underrated trend reversal. It's not been talked about much.
Well, listen, if you're listening to this, you definitely need to go onto the YouTube and check this out and see this chart, because what you're seeing is you're starting to see the gap between the two get closer, and that's going to create the market. If that continues that over the next halving, that's going to create the market condition. Because what's going to happen is you can see the chart. The liquid supply should continue to grow, but the circulating supply is going to start to level out.
Exactly.
So interesting.
So the gap will get, it will, illiquid supply will keep outpacing circulating supply, because eventually this was doomed to happen, right? Because
of course,
circulating supply is like halving every halving. So it was obvious that, also with Bitcoin being a store of value, which, means that most of the Bitcoin will be hodled, will be, held in cold storage. So it's kind of obvious that liquid supply will keep on growing with the store of value narrative. And so maybe then to get to the next chart. So what does the Hodl model do? So in the Hodl model actually tries to model the growth of a liquid supply. And so it's a log growth curve, and it actually has a high R-square value of 98. But so we get, so you can see with the Hodl model that and I call it the inflection point, is that so if we keep on this trend, then we make, and in the bottom, in the bottom chart of these two charts, which are shown here, you can actually see illiquid supply as a percentage of the total supply. So you can see that, we started out as more or less 100% illiquid because, when supply got added, nothing got spent in the beginning. So it started out as 100%. Then it started dropping, but we made a low of illiquid supply around 70%. And since that, we've been rising. So illiquid supply has been rising. And so that looks very bullish for the future of Bitcoin, because that is actually what Bitcoin scarcity, what the digital scarcity is about.
What's the dotted line on this chart?
So the dotted line is the Hodl model.
Oh, okay.
Yeah. So also in the bottom chart, that is actually the Hodl model mapped onto another perspective, which is the illiquid supply as a percentage of the supply. And you can see that there, the Hodl model makes this low in the inflection point because that is where the trend reversal is starting to happen. So Bitcoin actually was getting, so another way to look at it is, and maybe we can go then to the next chart, is the available supply for trade. So if we look at, so this is instead of the illiquid supply, we're looking now at the liquid supply. So the actual supply that's available for trade.
Does that mean for trade generally, or that's on exchange being traded?
Yeah, that's just. Yeah, I mean, we look at the blockchain, right? So all Bitcoin that is kind of seen as liquid, so which is like moving a lot, we can look at that. So that's kind of, you can see it, you can look at that and say, this is liquid Bitcoin. So this Bitcoin is kind of available for trading and for buying and for selling. And so if we
does
look,
that assume that like any Bitcoin transaction is like for a trade transaction, like going to an exchange?
Yeah, so I mean,
that's a really good. Let me just add to that. See if Danny's think about it in the same way. Do you consider Bitcoin that is liquid because it's being spent as also available for trade, and therefore is every purchase really a trade? Like if someone goes onto my website and buys a Real Bedford jersey with Bitcoin, do you consider that a trade?
Or would that be part of the liquid supply?
No, yeah, that would then become part of the liquid supply, depending on the spending behavior of that person. Now imagine I'm stacking sats like all the time. I'm DCAing, but I love, Real Bedford FC, and I want that shirt, So I decide I go.
Do you?
Yeah, I do.
Have you got it?
Yeah, not yet.
You need to increase that liquid supply.
Yeah. So I can buy. So if I buy a T-shirt and online, and I spend a little bit of that Bitcoin, but if it's less than 25% of my total stack, then I'm still considered illiquid, so that doesn't change. But it looks in general at the spending behavior. Now, if I'm an entity that spends a lot, I'm constantly trading, that is seen as a liquid entity. So
I see. So if there's a big stack there, you see a wallet address with a bunch of Bitcoin in it, and I just buy one jersey, that whole stack you could consider illiquid.
Yep.
But if I'm a trader with that big stack and I'm trading lots, at any point I might trade that.
Exactly.
Okay, yeah. That's interesting. Yeah. But that is a point though. Like I'd never thought of it like that. Every time you purchase some of Bitcoin, you're making a trade. Mm-hmm. You're making a trade between holding that Bitcoin and spending it. It's the same, if you spend it on a jersey, which is priced in pounds because we do price them in pounds, that's no different to going on an exchange and selling Bitcoin.
Exactly. Yeah. Well, on Bitcoin on an exchange often is not seen on chain, right?
Yeah. Because that's how you classify which is okay. I see.
But we do know we can differentiate between Bitcoin on exchanges. We know most of the exchange addresses, and we can kind of see.
So this Hodl model, this part of the chart, the available supply as a percentage of total supply, is kind of telling you the same thing though, right?
It's kind of the opposite. Instead of looking at the illiquid supply, we're now actually looking at the liquid supply and the high. Yeah, so there's liquid and highly liquid, but here I combined them. I call them available supply. So practically, it's not a perfect representation of what is happening, right? It's like we try to estimate, but it shows interesting data, right?
But there's common sense logic to it as well.
Yeah. And so here you can see in the 2013 cycle, which it kind of starts, we can see that the available supply for trade was around 20%. It started more or less around 20% of the total supply. So in this chart, I account for growth of market cap, right? So that's why we look at it in percentages. But if we look at the second halving, so the catalyst basically for the 2017 cycle, we start out around 25% of the supply being available for trade, right? And so obviously it goes down when we go into the bull market because some of that supply gets captured. And then you can see that in the bear market, again, it rises, in the 2008, 18, 19 bear market, it rises heavily actually. And so at the third halving, we start at 28% of the supply being kind of available for trade. And then we go into the last bull market that we had and we start going down.
This is a significant drop.
Yeah, it's really a significant drop. Yeah. And so, but only the hype in the market was only on the first part of the drop. But the second part of the drop, and that's kind of part of this trend reversal, as I was saying, like since the third halving, something changed. What did change? Well, the halving cost that the supply issuance, got lower, and so the liquid supply growth has been faster, and that's why the available supply has slowly been like going down. That's the trend reversal. So that's what the Hodl model tries to map, and so this is kind of very
bullish,
very bullish for the next cycle, very promising, because what if we start the next halving again around let's say at the current we're currently
go back a chart, Danny. Maybe 2 charts. Yeah, go back one more. Okay, so even if it was the average, hold on, that's the average circulating supply will be 450-ish. The average increase per day.
Yeah, after the fourth halving.
But if the average liquid supply goes up,
imagine it just
stays the same.
Stabilized. Let's just say it's kind of stabilized and it just stays around the same level currently. Even then, it will just continue to, Bitcoin will get more scarce.
Yeah. But if it goes up as well, you've got compounding effects.
Yeah.
Danny, we're going to need more Bitcoin. Fuck.
So here, this is people selling the bottom in 2018, right?
Yeah.
That was you, right, Danny?
Yeah. No, I actually, I did all right in that time. But then we've not had anyone selling the bottom this cycle.
Yeah.
Why?
We had. It's just that the trend reversal, which is what I tried to explain in the first chart. So there is this trend reversal because supply issuance halves every cycle, every halving. So at some time, illiquid supply is going to outpace supply issuance, and that is, in my opinion, what happened in the third halving, and that's therefore available supply has been going down just because of this trend reversal.
This is again, if you're listening, you've got to go and check these charts out. Can we link them in the show notes? Can we make these charts available?
Yeah.
Do you care if this is the presentation online?
Yeah, or I can make a thread with all these charts maybe on Twitter, and then we can link to that in the show notes.
Do that. I think people need to see this.
Yeah.
Okay.
And
this is stock to flow.
Yeah. So here I use the Hodl model to actually make a Hodl price model, and now we get a kind of bit into the stock to flow territory, which I have not heavily promoted this model because of that reason, because I don't want to be a next stock to flow model in any sense or way, But there is some caveats with this model as well, and I will get into them. So the interesting thing, and maybe also to differentiate between stock to flow. So stock to flow is a model based on scarcity, but it's a model based on Bitcoin's total supply. But the interesting thing about the Hodl model is that we actually look at the
daily
available supply.
And
what did we see? We saw that the available supply for trade during the last bull market was the highest it was ever been. And therefore, it's kind of, an explanation for also why maybe last bull market might have been more disappointing than we expected. And also a reason why stock to flow has underperformed so much, because stock to flow is based on scarcity, but that does not hold into account the actual available supply for trade. And so in a way, the Hodl model tries to, look at the available supply for trade, and
which is a much more accurate number to use. Look how what is 1 SD?
1 standard deviation.
I mean, it literally bounces off that.
Yeah,
twice.
So I published the first version of this chart 6 months ago, and I have not even posted this update at all ever on my Twitter, because I didn't want to create a next stock to flow model.
You will, and then you'll have 1.2 million Twitter followers.
Exactly, and then the model
1.8 now.
Is it 1.8?
There are some issues with this model as well, so therefore I don't want to really pump it.
For the non-mathematically analytically minded, including myself, explain what a standard deviation is.
Yeah, so a standard deviation is we look at the price history, and we look at how far does it go away from the mean, so from the average price, so from the model line, in this case, the dark blue line, which is the model line. and then we can look at that, like how far, what is the distance between the model and the price value. And so one standard deviation is a common term in data analytics, where we can see like how far is the distance, and because it updates, if there's new data available, the average changes, and so that's what the standard deviation is.
So we should approach 100K around the fourth halving,
according to this model. But I do want to, I do want to say it's not my.
Come on, say it. You can have your disclaimer.
Root says it's.
I will definitely have a
gonna hit
disclaimer.
100K.
Yeah, no. So the thing, and that's the next interesting thing to get into is like one of the more famous charts, which is a relatively conservative chart, is just the log growth curve.
Yeah,
you have seen that many times, I suppose. And so the difference between this chart and the log growth curve chart is that this chart actually starts similar. So before the inflection point, it actually starts just like a log growth curve chart. But then at the inflection point, it kind of so it starts to slowly go up. So actually, the rate of growth is the lowest at the inflection point for the model, and that's because this is an inverse S curve. So the adoption of Bitcoin goes in an inverse S curve. So we tend to go up. There are several reasons why why this inverse S curve is a logical adoption pattern. One is because the dollar will eventually hyperinflate. So it's not so much because the Bitcoin is going to gain more value, but
you think that's inevitable?
Eventually, it's the destination of every fiat currency, right? Like,
yep.
But another reason to make this inverse S curve to go up is scarcity, like digital scarcity. But the problem, and that's also the problem with this chart, and perhaps why it's too bullish, and it's also one of the reasons why I have not really been promoting it much, is because a growing market cap is a reason why we would get like a log growth curve. So there's actually forces that are at play. So a growing market cap means basically that we need like more money to move Bitcoin. If the Bitcoin price increases, you need more money to move the price each time. So that's a force, like a downwards force, right? So and that's what we have kind of experienced since 2010. Volatility has been decreasing kind of, but also we have diminishing returns, right? And that's because of this force, like a growing market cap. So we have this downward pressure on Bitcoin because the market cap is growing. It's harder to move the price. So that's why we have less gains in each cycle.
But could this get more volatile again as the supply, the daily liquid supply decreases? Yeah, there's an increase in demand.
So that's the theory of that's basically the hypothesis of the Hodl model, is that because scarcity will increase again, Bitcoin will again become more volatile in the future. And maybe a good analogy here is like, so imagine you are a creature and you only live 1 year, and you start on the 1st of January of that year.
You go fucking mental.
Yeah,
you go partying, get pissed, and then you're wrecked. You need to calm down.
Yeah.
And then as you approach the end of your life, you're like, fuck it, I'm going to go for it again.
Yeah, that's a good analogy as well.
Is that what you're basically?
It's not the one I was going for, but
that's what Daddy was thinking about.
So no, if you start on the 1st of January and then you start measuring the length of each day, then by the time you get to the summer, you kind of made this theory, right? Like, days are lengthening, right? Like, so we have diminishing returns, days are lengthening, because it's an observable pattern. But, and that's looking at Bitcoin's price history, practically from the third halving and back. If you look back, you could look at it as this year, or this half a year, the 6 months, the past 6 months, we have lengthening days. But then you get to the summer and you get to the longest day, and we get this reversal, right? Like scarcity is Bitcoin, the available supply is decreasing. Suddenly this trend reversal that we just talked about in the Hodl model. And so suddenly days are shortening, and then, so the problem with the log growth curve, like this model, which is obviously it's a conservative model, so in that way it's a better model, because if you're wrong to the upside, it's not as bad as being wrong to the downside, right?
Oh well, I'm only slightly richer. I prefer. I mean, your analogy is obviously better than mine.
Yeah. So
Yeah, shut up, dickhead.
yeah. So that's the idea with the Hodl price model. Now, so we talked about these pressures. So the thing that's not accounted for in the luck growth curve is actually digital scarcity increasing, right? So if we get less available supply and more upside because of it, that's not kind of accounted for in a normal luck growth curve. Now, the problem with this model is that we actually we account for the digital scarcity going up, but we don't account so much for the increase in available supply, the increase in market gap, I mean. So it's, so therefore, perhaps it's too bullish, that's why I'm kind of careful with promoting it.
I understand that as well. You don't want to be like, this is very good data, but you don't want to live and die by it.
No.
So here's a model. If it works, let's test it.
I put this out as an hypothesis rather than like a predictive model. And the thing is, I don't want to generate the next stock to flow. And Twitter is always black and white, as you know. Like if I put this model out and I would put it out a couple of times, people would say, Root said the price is going to 100K by the next halving, right?
That's the title. That's the title of the next show.
Exactly. And so the problem there is that this is just a hypothesis. This is one model. We never should live by one model only.
My tip for you on that would be is if you put out the model and it doesn't work or it fails, say the model's failed, don't try and keep breathing life into that model. And
for now it has kept up with the standard deviation and we've kind of bounced off it. So that's kind of bullish. But I do think there's really this potential that it's perhaps too bullish. In the sense that we don't account enough for like the growing market gap. So perhaps the best model out there.
I mean, hold on, because you're saying by 2028, worst case scenario, that looks about 250K. Best case, we're over 1 million, maybe 1.1 million. Whew.
Yeah, I mean, I don't know, if available supply keeps shrinking, perhaps, I'm not saying it will happen, but
do you know what these charts?
We do see a trend reversal.
These charts also miss purchasing power of those dollars.
Yeah, well, that's actually, so the purchasing power of the dollar is one reason also why we would go up faster, right? So that is actually one of the forces as well, which kind of helps this model, give reasonable predictions. But so there's two forces to go up. One is the inflation it's just inflation in the dollar. So the dollar value goes down and therefore the inverse, S curve, it will go up steeper. The other one is digital scarcity, but the downwards pressure is the increase in market gap.
Danny, what's my new bet with Hodl?
Do you have one?
Yeah, we did one on that last show. It was something like he thought Bitcoin would go to like 1 million within a decade.
Was that it? I can't remember.
Because I'm fucked if that's right.
Yeah, you are fucked.
It's your
Presumably, though, on like the purchasing power of the dollar, this chart will only take into account like previous inflation. It's not going to be taking into account any kind of hyperinflation, is it?
Well, I mean, so it's an asymmetric inverse S curve, which is quite difficult to explain. But the first 10 years, we curved kind of to the flattest point, which is the inflection point, which is the third halving. That at that point, the growth rate of the model is the lowest, but the curve upwards is actually taking 4 times as long, right? So and that is because of the trend. I mean, we try to get the best fit possible, and it's actually based on the Hodl model. Yeah. So when is a liquid supply approaching this 100% of the total supply? And that's like in 2088 or something, predicting, like the Hodl model predicts that, that is then approaching.
Well, the 2088 we'll be dead.
Yeah, probably.
It's fucking bullshit.
I might not be.
Dude, you will be. Hold on. 88. You'll be like 95 or something. Hold on, when were you born?
Rich as fuck.
Yeah, but no one will care. You'll be that rich old dude that no one visits. This looks like that one where it compares shitcoins to Bitcoin. What is this? 1 halving, 2 halving, 3 halving.
No, this is just the Bitcoin halvings plotted out in a chart.
Yeah.
And now we get it actually into some charts which talk a bit more about like the recent situation. We can look at some like from a cycle perspective, but and use some on-chain. So here we look at the halvings, and the halvings are scaled. The previous halvings here are scaled to the current halving, right? So
this implies volatility is decreasing then.
Yeah, so this is the volatility decreasing, but yeah, the third halving was kind of this inflection point, right? So perhaps like available supply was the highest. That's the Hodl Model theory, right? So the available supply was the highest for actually the past bull market, and next bull market it should be lower, so perhaps we can see more gains. Here we can see time-wise if you compare the cycles from the halving, these red dots, which represent the lows that we made and the bottoms that we made, we're kind of time-wise in this chart, we're kind of aligned, right? So it's this different perspective. I mean, we can start from, as I said, you can look from the halving, we can look from the tops, and it's often useful to look at different perspectives because there's no one right way to look at Bitcoin cycles, right?
Yeah.
Like it's just like we should look at the state, and that therefore on-chain is so interesting because actually we can look at the state, what we're in, and then maybe one representation or one perspective on the cycle is because of that more valid than another one. And so I think it's reasonable to look like we didn't have the gains here that we all hope for, like prices above 100K. But in terms of the rest, it kind of looks like, diminishing returns. But we made kind of the bottom at the same, more or less at the same stage. And so that kind of gives a bit more confidence that the bottom potentially might be in.
Interesting. Very cool. This is a very bullish session.
So in the next in this chart, we again look at the halvings. So the same way, actually the same. It's kind of the same to the previous chart. We look at the halvings, but they're not scaled. They're just shown on the log chart. So we can look at them. And here I included realized price, so the average purchase price of all Bitcoin. And so we can see again also that at these bottoms that we made, we all fell below realized price, right? So at more or less the exact moment in time in the cycle, if we count from the halving. And so that again gives kind of this confidence, we've been above it for a bit now, again, that we might have the low in. But we can also see that I think in 2013, it can stretch out quite a bit. I mean, so therefore I wouldn't be surprised if price goes relatively sideways for the next 6 months, like perhaps if we like one warning signal would definitely be falling again below realized price. If we fall again below realized price, that could mean that we perhaps, might get another low, let's say.
Yeah, but that we had that in 2013.
Yeah, we didn't, we kind of rejected off realized price, right? So we tried to get above it, but we rejected off it 2 times. And only the third time we kind of managed to get above it.
But when you say it rejected it, that implies there's like a trading, like there's some trading against that, there's more just.
Yeah. So the reason why you would reject off realized price is because realized price is the average purchase price of all Bitcoin.
Yeah.
So when we're below realized price, most people are at a loss, and so when we get to that level of realized price.
They sell off.
They sell to get their money back.
Yeah,
practically. That's why
that makes sense.
But we've been above it now, and so that's. But a warning signal, would be if we get below realized price, which I definitely think it's possible. I think like this, we're in this extreme value zone.
But we haven't dipped that far. Like the previous 2 cycles, we dipped quite significantly below realized price, whereas we haven't.
Yeah, we also didn't have the upside this time, right? So do we need to get the downside? I don't know. Perhaps we do. But again, an increase in market cap would also perhaps mean that less volatility, right? So we don't necessarily have to. But so if we go, but I do think this is really a value zone that we're in, which might still take another 6 months or so.
Accumulation zone.
An accumulation zone, yeah. And perhaps, one warning signal is going again below realized price. We might make another low, but if we don't,
just buy the shit out of it.
If by the end of the year we kind of manage to stay above realized price, then it becomes quite obvious that the low was in, right? Based on historic data, obviously. So in this chart, and this is one of my favorites at the moment as well, is is, so here we look at the cycles aligned by the all-time highs that we made. And I took the April all-time high for the last cycle because that's when the hype was really in the market, and I'll show in another chart why that is again. But so here we align the cycles from the all-time high again, and we scale them actually by realized price. And why is that useful? Well, realized prices is the actual money that flows into Bitcoin, right? So it's actually it's quite a useful tool to scale by the money that flows into Bitcoin for each cycle. It gives this a better representation than just the intraday volatility that we have in general in Bitcoin. And so you can look at the pattern of the realized price, like it kind of lines. You can see that we went steeper into it in 2013 and then in 2017, and again we went steeper in 2017 than the current cycle. And that is because of, again, this diminishing returns, right? This volatility decreasing, and but then so we scaled by realized price. But since then, like since the drop when the top is in, realized price goes relatively sideways, for each cycle. And so we can also really distinguish here between the distribution top and the blow off tops. Very well. And so we've fallen below realized price, and here we can see that in 2017 or in the 2018-19 bear market and the 2014 bear market as well, we went to a price of around 13,000, but mainly we stayed around that price of 17,000, right? So in 2022 we actually touched 17,000, so we had this spike down to the 17,000 line. So that kind of, it would indicate that it's possible that this was it again, but we cannot rule out a drop to like the 13,000 mark, in the next 6 months or so. It is possible, this is the on-chain, just the short-term holder supply. So here we look at how much supply belongs to short-term holders. So it's again this classification of supply, and we can see these spikes within these bull markets. You can see the peak also of this short-term, like short-term holder supply is kind of peaking at when we make a top in each cycle. And so this shows again like how I use this as a proxy for hype. Like it's really kind of one of the better ways to measure how much hype is there in the market. And we can see for the current cycle that in the April top we had like a lot of hype. There was this huge spike in short-term holder supply, whereas for the actual all-time high that we had in November, it was kind of based on long-term holder behavior. It was short-term holders were not really involved, and so that's why we've kind of been correcting since April. So
interesting.
Which would again imply that that it's more likely that the bottom is in, because we have been correcting actually for quite a long time. We had this coincidentally this higher high, or this new all-time high, which barely surpassed the all-time high.
But if you look, each one of those highs is followed by it's got like a little child mounting next to it. So we could do the same again.
Yeah, we might do the same again. We might go down, and that's why I think like sideways price behavior is quite obvious. But you can also see that even though we went down, like the low was already in, right? So
okay, I see. It's a different thing.
So who knows? Over the next 6 months, we might see another rally and then a dump again. But
test pump.
Yeah, test pump. Yeah, exactly. Yeah, this is these are some bottom indicators I used. This is actually based on the short-term holder cost basis. Again, the short-term holder which is the same as the short-term holder realized price. So the average purchase price of short-term holders, that's the green line. And then we have some bands that we can draw from that, which I use this floor band to kind of see like how low can the Bitcoin price drop. Obviously these bands kind of fluctuate with the price. They're kind of like moving averages, in a way. But you can see that we bounced off this floor, and it's only like during bear markets or the Corona crash that we had that we really touched this floor band, and we also did that this time. And so it's this floor has held up very well over the last over actually whole Bitcoin's history. Only in 2013 in that spike down that we had in the bear market, we went like 2 days below it or something. But for the rest, we have been we have kind of only touched this floor. Yeah, and this is the last chart actually. This is here I show realized losses. So again, to show that the bottom that we had in June 18, the 17K that we touched, that in terms of realized losses, it was truly like this capitulation event, right?
Right. Okay.
Which was
panic sellers.
Yeah. Well, and forced sellers because of liquidations.
Oh, of course. Yeah. Well.
Yeah. And so also in the 2018 bear market, we actually had less realized losses than in last event. And these events are also, they don't happen often, which is kind of, again, showing that it's quite likely that the bottom might be in because, or we would have to see another such event. But, there can always be a catalyst for such an event. I don't know, macro circumstances don't look that great. So, things can still escalate, but it is quite unlikely for these things to happen, and so we've seen it, and so it's a good chance that the bottom is in.
Wow. So things are bullish, bottom's in, we're going 100K. Thanks for going buy more Bitcoin.
Yeah, well, I try to be conservative, but
how do you personally use these charts? Do you actually use it to give yourself ideas about when you should buy and accumulate, or do you just produce this out of interest?
Yeah, no. Well, I really like to analyze the blockchain also just because I like the fact that, there's human psychology that's involved in it, and it's really cool to analyze these things. But I do trade, but on the longer term. So, I mean, as I said already, on-chain is not good. I'm not a day trader, but I like to trade the cycle. But I have a stack for hodling basically, and I have a stack where I take a little more risk and do trade on a cycle basis.
What do you think, Danny?
100K is coming. Root said so.
Root said so. The title of the show will be, we're definitely going to 100K before the end of the year because Root said so. And if we don't, cancel that.
The Hodl model is the next stock to flow model, right?
Yeah, but you know what? At least it comes with some kind of good analysis. It's almost like you've built upon stock to flow.
Well, yeah, it's looking at the trends, obviously, of the Bitcoin scarcity trends, right? In that sense, it's a little, but yeah, I don't know. As I said, I'm very skeptical about this model as well. And I wouldn't take it too serious. Because of the increase in market cap, it's not maybe, incorporated enough in that model. So it's perhaps too bullish because of it. But yeah, we'll see in the future.
I think it's personally important that we don't have this consistently performing cycle that like it's easy to predict. I think the market needs to change. I think that's what did happen in the last cycle, but I think that's useful. I don't like the herd mentality of following price because I think that actually wrecks people. I think a lot of people probably got over leveraged in the last cycle and wrecked themselves. I think almost certainly they did. I think people, hopefully with stuff like this, become a little bit more conservative and hopefully just stack a little more conservative for the longer term. The Hodl model says implicitly, hodl.
Yeah.
You're rewarded if you do. I guess, you don't look at any shitcoins?
No, not much.
Good. Good, man.
How much attention do you pay to like just macro stuff that's happening?
Yeah, I do follow it, but I'm not nearly as good as Lynn Alden or some of the others that are great at it that I follow and look up to. So it's macro became a lot more important, especially this cycle. But I never had a lot of knowledge about macro before this cycle even. So I've been catching up on it. And I don't consider myself good to give advice on that at all.
Well, we had Steve McClurg on, and he's made some very good predictions about what will happen with the price based on his understanding of what he thinks the Fed will do. And there seems to be kind of a direct link with that. And again, it's another thing I don't like. I don't like the Bitcoin price being linked to Fed decisions. I understand why it is, but I think we should be decoupling from that.
Yeah, we will decouple at some point. It's just that we're now in that phase where we are correlated with the stock market. I mean, in previous cycles, we were not correlated with the stock market, or not as much. And, Bitcoin was not seen as like a proper asset yet to allocate to. Now we are at that phase where just a general investor will also allocate some portion of their portfolio to Bitcoin. That's why we're now correlated to the stock market. The next step is kind of like decorrelate again and to see Bitcoin, what it's truly meant for, right? And so I think this is just the phase that we're in. But eventually we will decouple.
And what else are you looking at now? Is there any other models you're looking or working on?
Well, I'm still building out my tool. Mainly what I try to do is also educate people on Bitcoin through my charts, and I do market analysis as well.
Well, listen, we will share this out in the show notes. Tell people where to follow you.
Yeah, I'm at TheRationalRoot on Twitter.
Big carrot. Really appreciate you coming in and doing this. This is super cool.
Yeah.
I don't know about you, Danny. It's made me more bullish again.
I'm pretty bullish.
Thank you so much for having me.
Dude, you can come on the show whenever you like. You have a free pass to call me or Danny up and say, I've got some shit I want to show you, because that is brilliant. So thank you for doing that. Anyone listening, this was one of those ones you really need to see. So go check out the YouTube video. Go check out the show notes. Check out the charts. Thank you, Root. That was amazing. Appreciate you, brother.
Thank you.